Hi there, Mike Brady with Generosity Wealth Management, a comprehensive full-service firm right here in Boulder, Colorado. I want to talk about the first quarter of 2016, but I also want to talk about the human behavior that we bring into up, down, and sideways markets. And when we look at a 2.5 year time horizon, it's really been a sideways market. Interspersed with some down and up markets in between there. And so what does this really cause many of the average investors to do? And I want to talk about that. Also the nonlinear nature of markets. Let's talk about the first quarter 2016. I'm going to put up on the chart there the unmanaged stock market index, the Dow Jones, the most common, not because it's the best, but only because it's the most common. What you'll see is that it went sharply down for about 6 weeks, all the way down to about 15,660. 666, and then now it's on its way closer to 18,000. Who knows if it's going to hit 18,000, but that's a huge variance there. And if any kind of a diversified portfolio with some stocks and some bonds mushed together probably didn't see the huge down like that 100% stock market index, but also probably didn't see the huge up on the way up as well. And so it's good to remember that most people don't have 100% of their portfolio in just stocks or the Dow Jones. So it's hard to always correlate exactly what you're doing with some kind of an unmanaged stock market index. If you want 100% of the market one way or the other, there are various indexes and ETFs that you can go into, but the reason why we have portfolios, or why most people have portfolios, is they like the dampening effect, so that they're not getting all of the down or all of the up. So far this year, give or take a few percent, it's about break even after being sharply down just 7 weeks ago. I will tell you that I did a video about 2 months ago, and at that point I was very calm, and one or two clients that I'm very close with said, Mike, how can you be so calm? Every day it seems like there's all this bad news, and the market lost 200 points here, and 8 days in a row it lost, or however many days in a row. How can you be so calm? And my answer is, after 25 years, I've seen ups, I've seen big swings of multiple days and weeks and months of being up. I've also seen downs. I've seen 2000, 2001, 2002, that was 3 negative years in a row. I mean, I've seen this. And as a matter of fact, I kind of expect at some point that there's going to be declines. I mean, that's just part of the deal. And so that when it happens, I'm not so surprised. Markets are non-linear. And what that means is, just because it's down for 1 month doesn't mean it's going to be down for the entire year. Or if it's down for a week, doesn't mean the next week it's going to be down. And of course, the opposite is true too. Things go up, they go down, and they go sideways. And one of the dangerous things is when it is sideways, meaning that when you look back a year or two or even 3, and you haven't really made much money as an investor or portfolio, and it's just kind of middling around, there's this tendency to want to do something, okay? I'm going to put up quotes up there, to do something. There's obviously something that we've got to do. And I would say that idling is part of the deal. I mean, it's sideways, down, and up. And the important thing from a behavior point of view is to be cool as cucumbers when it's down, if you believe that over the time horizon, and hopefully that time horizon is at least 5 years, that it will be higher. Okay, it's absolutely not guaranteed. All I can really say is I'm going to put a chart up on the screen, and what you'll see is on the second and third grouping of bars that a diversified portfolio has always at least broken even over a 5 and 10 year time horizon, going back to 1950. But it could be different in the future. Okay, I mean, once again, by definition, the future is unknown. That's why they call it the future. So that being said, I think that it's important, particularly when it is a sideways, to and maybe we're not making much money, we're just in a holding period. Not to just get so anxious and get frustrated and try to be moving around, because one of the other things that I've learned is that people want to move so that they feel like they're doing something, when sometimes the calm professional is saying, we've looked at everything, and doing nothing is a proactive choice, okay? Not moving things around just to feel like we're doing something, but really not getting anywhere. Let's avoid that. Let's avoid the false feeling, the false hope of moving things around just for the sake of feeling like you're doing something. And I have to tell you that I think that some of my colleagues, my peers sometimes do that. If they're not moving things around, clients feel like they're not doing anything or earning their fee or whatever it might be. And I think that does a disservice to the client, that does a disservice to the investor. That's all I have for today. I wanted to make it real short. I've got all the quarterly statements out. Hopefully by the time you get this newsletter. I'm also taking I've sent an email out to all the clients that I'm taking a 2-week vacation, first one in a couple of years. And so I might be a little slow on responding, but I will be able to respond via email and phone if necessary. But that being said, if you can hold off till after April 14th, I'll be happier, and hopefully you'll be just fine. 303-747-6455. Always open to any concerns, questions, criticism, anything. Just give me a call. Love to open up that dialogue. Mike Brady, 303-747-6455. Thank you. Bye-bye.